Hi, everybody. Scott Riley, the Market Update Desk, April 9th, NMLS number 157524. Well, we have more deja vu today, more whipsaws going on. My neck's tired of watching the market go left and right and up and down. Once again, we start pre-market one way, hit market open, it goes another way. And yet in the afternoon, it is yet a third way for the day. Let's break down what's going on out here today. So we opened today with more tariff information that with the trade war intensifying and rising quickly. So the U.S. hiked late yesterday, or I mean, effective this morning, I should say, tariffs on China all the way up to 104%. China retaliated, firing back, raising their tariff level from 34% to 84%. The EU decided to jump in to the fun and increase their tariffs 25% for certain goods, not across the board, but just certain things. This uncertainty, pre market and market open, had investors pull back both from equities and bonds. In fact, to start the day in pre market, stocks were down over, I think, 500, and mortgage backed securities topped 4.5%, which is our highest level in quite a while on the 10-year Treasury. In addition, some people had speculated that China may be using their weight with the U.S. treasuries that they own and their purchase rate, use that as kind of a strength to say, hey, we'll slow down our purchase of U.S. treasuries if you don't slow down the tariffs. That was said, but in all likelihood, when you get down to the schematics and the data of it, it's going to be very unlikely because no matter what, the U.S. Treasury market is still the gold standard in the world. Some had speculated that the German market may benefit significantly from this, and maybe there's going to be a shift from U.S. Treasuries to German Treasuries. The issue is German Treasuries are only yielding about 2.5%. So most likely this is not going to happen. And it is kind of shrugged off as far as in the investment world. Now, recession fears still are growing. One economist, Lacey Hunt, believes we're already in a recession, just not officially declared. And we've had that off and on for the last year or so. He also thinks that the Fed should start cutting rates now versus later to start to blunt some of the effects of the tariffs. Now, current Fed official Neil Kashkari countered that, saying, we shouldn't cut rates yet. We don't know the full effect of tariffs, and that makes cutting rates risky. In addition, they have the dual mandate for maximum employment, and that's a variable right now. If you looked 4 days ago, there was a projected potential 4 cuts for this calendar year. That's highly unlikely, at least at this point. The market expectation now is more of what it was before at the beginning of the year of 2 cuts. So as I said, markets opened very sharply lower at pre-market, almost down 700, 10-year over 4.5. Where we're at right now, I'm looking, mortgage-backed securities are down 26 basis points, but they were down over 60 at one time. The 10-year Treasury is at 4.415. That's down somewhat dramatically from the top of 4.5. The Dow, which started at minus 700, is now roaring it up 1,200 for the day. The reason for that is afternoon comments by President Trump of putting a 90-day pause on some of the tariffs outside of China that they still want to keep in place. So we're getting this zoom back and forth within the markets based on tariff talk, retaliatory tariffs, and other information. Now, later today, we're actually going to get a very important 10-year Treasury auction. That's going to be kind of a driving force this afternoon of what's the appetite for our treasuries. That's going to tell us a lot. Now, in addition, we made a couple of comments of this yesterday. Oil's down to, as I'm looking right now, under 56 a barrel. Not more than 2.5 weeks ago, we were sitting at 70 a barrel. So we're going to start to see a decrease in gas prices. Now, one of the articles I read yesterday, the futures market for next year was looking at the potential of oil under 40 a barrel. So lots going on there. That could be a very important benefit, give us a great benefit within the inflation numbers with lower oil. So we'll see how that all plays out. Stay updated as we get changes. We'll quickly put information out. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon. 616 293 2189.